This is the Bank Nifty daily charts. Green candle formed today, but the market stayed range bound. It didn't break yesterday's high, nor did it break yesterday's low. It was a relatively volatile day today, even though the range was really small. This is the 15-minute chart. Now, as I was saying yesterday, that there are a couple of trend lines, right? Upward trend line and a downward trend line that is being formed. So what we were constantly doing today is having to adjust for these two to see which one of them will be valid. We had a zone over here at 31,350 to 31,400, and we had potentially this swing low at around 41,050 or 41,000, right? So so that's kind of what the day was like. Now, if I were to take you like this, as the day opened up, it touched the bottom and top trend line. It went towards this zone here, and it didn't break it. So we thought, okay, the upwards trends, it's going on for a few days, that this trend line is still valid. It didn't even pierce this zone, or maybe just pierced this zone and started getting rejected, which made us think that this upward trend line is now getting tested. Sorry, is void, and the bottom trend line will start. So from what was this trend line, we had to keep readjusting. So from what were those first 2 points, we moved them to these 2 points to continue our trading day. Again, looking at the fact that it reached this 41,000, started breaching here, we thought, okay, this trend line is now valid. And just as we're doing this, it takes support not at 41,000 but closer to the 40,850 levels, and then starts making big swings again. So it breaks the downward trend, breaks up swings, down swings, constantly stays volatile, ultimately ending up closer to the top zone. So now straddle opened up at 1209. This is for the 3rd November. Yesterday it closed at 1155. And today the market, after all of this volatility, the straddle closed at 1058. Now through the day we had to do considerable adjustments. As the market's moving up, we wrote puts in the money. As it came down, wrote calls in the money, so that we could just adjust to make sure that we are delta neutral. Overall, I actually feel that the market may still be looking upwards. It's still quite bullish in trend, but today the it has formed like a box pattern. So this box pattern is potentially going to be our range for tomorrow in terms of breakout. So if it breaks this, then it can potentially reach the all-time highs of 41,800. If it goes below this, it can come down to this 40,300 level and cover this gap that's there. So what's important to see is how today's high and today's low, so not here, I would mark this around here, right? So 40,850 odd levels and 41,400 levels. If these are valid, then we get to see where the market is going, because currently there is no clear indication of where the market goes. As the market ended, if I were to adjust the trend line, I could say it's still looking upwards if I do this. So, but the resistance here is going to be key. If it breaks this, it can go all the way up to 41,800. If it doesn't, and it actually starts breaking this trend line, then we may get a reversal trend line that we can draw. That might start something like this, go something like this, and go here. So this 40,000, 41,000 range will be critical in order for it to have a breakdown. So that's kind of our plan for tomorrow. We are waiting to see where the market opens. Overall, um, we still are slightly bullish. We want to make sure that it breaks this 41,000, covers this gap in order for us to have a slightly bearish view. So we got to just wait and see, adjust positions to make sure that we can end our week in profit. profit.